Hi, this is Terry Campbell with Johnson Insurance, and we're here with another installment of Outside the Box. Today, we have got one of our special customers joining us, one of our great customers, and we want to hear a little bit about them and about their company and how they've started and grown and where they're headed. And I'm going to introduce I'm going to let him introduce himself, Scott Dahin, who's the CEO of Tricore Investment Group. And Scott, tell us a little bit about yourself, and then we'll launch into some conversation here.
Yeah, thanks, Terry. Yep. So I've been in the storage industry for about 15 years now. Started as a broker, just finding great deals and connecting, buyers and sellers. Underwrote a lot of deals, listed and sold quite a few, and really found it to be an interesting business model. Started to understand margins, and was all the while working on my CCIM for brokerage. Started actually buying small facilities. First one was about 625,000. Sold it a couple of years later for about 900, and got my feet wet, as a small owner of 1, 2, 3, and then 9 properties, and then we had 11 and sold them off, and started on our second portfolio, and that was in conversions, where we took 3 large warehouse, grocery stores, and alike, and translated them into Class A climate-controlled storage. And so that was in the start of a lot of the Kmart's going out and alike. So it was good times. Rates were going up, and so have worked through a few different cycles in self storage, and love real estate. Was brought up in a household full of real estate. So that's kind of how we got to where we are now.
Awesome. So tell us about, when did Tricore itself start, and what makes your investment approach unique? How do you approach that?
Yeah, I think we've always been about growth strategies. So really, how do we, show a large amount of appreciation of assets over hopefully a shorter amount of time than some. And it's really just that focused approach of value add in larger expansion or conversion projects allow us to really buy below basis or below intrinsic value of the real estate, so below that replacement cost. The same Zell model in a lot of ways has got us where we are. And I think, when we've focused more on those strategies and less on set it and forget it type of assets, we've done better. So that's basically our philosophy is a growth strategy. Although we like to create income on the back end, in certain economies, and with interest rates as high as they've gone, we've had to shift focuses and strategies. So it's made us a better fund manager and asset manager.
You guys are seeing a lot of growth, and it's been pretty fast. What excites you the most about where Tricore is headed next?
Yeah, I think the market's always changing. So we're making sure we're evaluating our portfolio, our ability to buy with that of the market. Interest rates having a big impact. Recently, and also for the next 6 to 8 months, we think it's going to incentivize our ability to buy. It's just choosing the right properties and making sure we have the right partners along the way.
Awesome. So as you begin, we're going to talk a little bit. We're going to talk a little bit about insurance, but as you begin, you're expanding. As you are expanding, what were some of the biggest challenges that you had faced and do face around insurance and risk management for your properties?
Yeah, I think for us, we've had quite a few bad years actually. Over the past, 2 years, we've had anything from an E5 tornado to Milton that sat one property under, 3 feet of water for about 12 days. So, it's been, tough for us to work through some of these claims and through some of these disasters. But it's also, made us look thoroughly at some of the policies and, limits, and having somebody really that focuses on that within the team, has been important for us.
Were there gaps and frustrations that you guys had working with other companies in the past?
I think because we grew so quickly, we didn't really understand, what having the right partner looked like at different times. I think early on, we had 3 or 6 or 10 properties. We were always in the mode of selling these properties. So every, year and a half to 3 years, we were cycling through, and in certain times we held assets longer, and these types of things happened, and being able to rely on people, in the hard times is really, when people either shine or fail. And I think we saw that we had just overloaded, the admin and the, claim processing side, and it was an overload for us, frankly, on managing it all. And then, other things that would be, standard COIs, EOPs, that were, need to go out, fell short. So it's just a lot to juggle for us, and without having a good partner there, it became even more difficult.
Gotcha. What I know we've kind of been working together for almost a year now. We've done a lot in a year, and you guys have got a really nice portfolio that we've worked with you on over this past year. But what initially stood out to you about working with Johnson Insurance?
Yeah, I think it was experience. After being in the business for as long as I've been in, I know it's actually you, for instance, Terry, have been in the business probably twice as long as I have, and having that experience and going through more cycles, seeing more evolution of this industry, I think is a big one for me. And either, and others, say they've been there, but I think the different facets of going through those cycles, either as an owner, as an advisor, or as an agent, has been helpful. And me explaining kind of the situation and where we stand with deductibles. I think there was a lot more about insurance and ability to make things more customized than I knew, previously. So it's good.
Got it. Now, from your perspective, are there insurance or risk factor issues that other investors may be overlooking in the self-storage industry right now?
Yeah, I think I've seen actually over the last 3 or 4 years, compared to in the late 20 teens, is really the request for seeing all the policies. So every deal we purchase, every property we manage, we make sure we have all of that readily available for investors. Just because we know it's a hot point, we have a collection of kind of the most important documents that we share with those investors. And of course, everything else is available upon request, but we feel that there's a standard amount of documents. And back, 10 years ago, we really didn't have those in that folder available. And now, insurance, property taxes are a couple that we focus on to make sure that they know that these are somewhat controllable but non-controllable expenses for us, and being able, and knowing that we manage as best we can to mitigate any cost increases.
Got it. So for others in the industry that are, especially those that are scaling portfolios, what advice might you give them when they're choosing an insurance partner?
Yeah, I think communication is probably one of the biggest for me. I like blunt, good communication. When we're talking insurance, and it involving so much value for us and for our investors. Our job is to steward that, and to have somebody that's a trusted partner along with that, helping to mitigate not just the cost, but working through the claims, working to make sure we have the documents available. Believe it or not, I don't think that we ever got timely policies. I think a portal was probably not even implemented in previous brokerages. until it was way late when we were looking at other competitors and going, or competitors of theirs and going, why don't we have a portal? Why don't we have more access to information or access to people as well?
Awesome. Well, you know, yeah, I think you alluded to it a minute ago. The last couple of years have been a little rough as far as insurance is concerned. And one of the things that we're starting to see at the time that we're recording this, which is in October of 2025, we're starting to see that rates are starting to go towards leveling out. They're not having quite the quick rise that we've had the last couple of years. The rates definitely rose the last 2 to 3 years in a pretty fast manner, and there's a lot of different reasons. We won't get into that right now, but we are seeing signs that it's leveling off, which is a good thing. It's a good thing because you can have a better idea of what your numbers should be when you're doing pro formas now versus before. You just throw a dart and cross your fingers. But it's getting where you can have a little more faith in that. And so far, knock on wood, this year, so far the hurricane season is we're past the normal worst peak. So and especially where you live, that's a good thing, Scott. Is that all these? I don't want to jinx us by saying nothing's going to happen, but it's looking better every day that we may not have those issues. So some of the things like the hurricanes that have been causing those increases are really down this year, and hopefully as we go into next year, we see some benefit from that. But I don't know, Scott, if you have anything else you want to add. I don't have anything else really I want to ask, but I appreciate you being on here with us and spending a few minutes. I know you're a busy guy, so if you got anything to add, throw it in. If not, I'll talk to you later, and I'll see everybody else on the next episode of Outside the Box.
No, I think that, we've already seen over the last, 6, 8 months and working with you that, even through, new team members coming on, team members leaving, as we grow and find the right people, that we have a constant. I think that's something I appreciate and wanted to say that, we love the partnership in that, and that we can scale. We know we're buying and selling portfolios, so our ability to not have to have somebody on our team that focuses on that on insurance all the time. And I was always the guy that always had to focus on that and have the administrative help and just how you guys are set up. I commend you for all things insurance because it's something I don't want to specialize in. I'm glad you do. So.
Awesome. Awesome. Well, we appreciate the relationship and look forward to talking to you again. Thanks again, Scott, for joining me today. And folks, look forward to seeing you join us at the next episode of Outside the Box. Thanks and have a great day.